Hi, I'm for freefincal, and let's take a look at Axis Nifty 100 Index Fund. This is an open-ended fund that will track the Nifty 100 Index. The NFO for this fund launched today, and it will be open for 2 weeks, and then after that, it will be open for continuous purchase. So the question is, can active large cap investors replace their holdings with this Axis Nifty 100 Index Fund? And people who are currently investing in Nifty and Nifty Next 50 combinations, should they switch over to Axis Nifty 100? So let's answer both questions. And the introduction of this fund has some significance because I had talked about the fact that only 5 large cap funds have comfortably bet Nifty 100 as of December 2018, even many funds did not have downside protection. That is, they did not manage the risk better than the index consistently, and so that's a real problem. So also the BSE S&P report as early as April 2010 also talked about a similar problem. So this is not a recent phenomena. So this has been the case for a long time. And you may notice that many AMCs are pushing these index funds, and they say that we want to cater to both passive and active investors. The fact is that active fund investors are being the sales comes from regular plans because it's they have higher commissions. By definition, index funds will have lower commissions even for the regular plan. Therefore, I think the AMCs are hoping that the big robo portals like ET Money, Paytm, etc., Zerodha maybe, they will push, because of their robo advisory, they will push the direct plans, direct plan index funds, and that's why I think, in my opinion, they are launching index funds. That's anyway, that's only speculation. So the question to ask before investing in this fund is that why should I invest in Nifty 100 when Nifty 50 is there? Because the Nifty 50, the top stocks in the Nifty 50 and the top stocks in the Nifty 100 will be the same because of the fact that both indices are market capitalization weighted. There will be an additional small contribution from the bottom 50 shares, which is part of the Nifty Next 50. We will talk about that. I had also given you in a previous video several ways in which you can combine Nifty 50 and Nifty Next 50 to create a large cap index, Nifty 100, mid cap, and even a small cap index. So there are many ways to do it. And the other problem is the fund manager will have 100 stocks. Even the largest active fund today has got only 52 stocks. So handling 100 stocks could be a problem. I talked about impact cost. That is the problem when you buy and sell large quantities of stock, the difference in prices. So it will be a problem. We also have to look at the expense ratio. So we'll find out. So as of September 2019, only 14 of the 28 large cap funds had a downside protection consistency of 70% or more. That is, they typically fell lesser than the Nifty 100 whenever Nifty 100 fell, and that is really bad because the only USP of an active large cap fund is downside protection, right? Volatility management, and that's absent. And also the outperformance is also only 50%. So it's essentially become a coin toss, right? Whether it will, whether your active fund will beat the Nifty 100 or not will become a coin toss. Therefore, clearly the answer to should I replace my active funds with index funds, active at least in the large cap space, the answer is definitely yes. There's no doubt about that. So now let's compare Nifty 100 versus Nifty 50. So what we will do is to first look at every possible 1-year return. So every colored line here has got 1,881 1-year data points. The red line is Nifty 100, including dividends. Nifty 50 is the blue line, including dividends. There's not much of a difference between the two over 1 year, but over 3 years, at least until about January 2018, when the Nifty 50 and Nifty Next 50 and the mid-cap indices started falling, the Nifty 100 gave a slightly better return over 3 years, and that is also the same the case over 5 years and also over 7 years. So there's a little bit of extra return because of the bottom 50 stocks in Nifty 100. So there is a good case for people who are investing only in Nifty 50 to try and shift to Nifty 100 because the risk is very comparable. I've not plotted it, and the return is a little bit extra. And also, I had talked about blend indices combining Nifty 50 and Nifty Next 50, and I had shown that if you take 90% of Nifty and 10% of Nifty Next 50, you can closely replicate the Nifty 100 index. And if you take 20% of Nifty Next 50, you can get a slightly better return than the Nifty 100 or comparable return over 10-year periods. So the problem with the blend, of course, is that you have to do rebalancing, you have to worry about taxation, you have to worry about exit loads and so on. That problem will not be there when you're just using a Nifty 100 for your large cap space. Clearly, there is, the Nifty 100 is a very good index to invest. Definitely, it's better than Nifty 100, Nifty 50, and also it is more efficient, tax efficient than a combination of Nifty 50 and Nifty Next 50. The only problem is that we should give this particular Axis fund some time for it to perform. Let us find out how much AUM it has got. The Axis Bank fellows will push the regular plan of this index fund to customers who may not know what they're doing. Let's find out the expense ratio. Let's find out how much AUM it has got. Let's find out how well it is able to track the Nifty 100. Let's wait for it for 6 months, and after that you can take a call for switching to Nifty 100 either from large caps or from your combination of Nifty and Nifty Next 50. I would suggest if you're using Nifty and Nifty Next 50, as long as Nifty Next 50 combination is a little less, 20-30% or so, I think it's okay. You can just continue. Don't worry too much about it. In any case, I think you should give this Axis Nifty 100 index fund some time, at least 6 months. Let's wait how it pans out, and then you can take a call. So that's what I wanted to say in this video. I'll catch you again in the next. Bye bye.